There are 7 things you have been told about investing that are flat out wrong. Not kind of wrong, not a little misleading, wrong in a way that has cost women in our communities years of wealth building. Wrong in a way that kept us on the sidelines while other people quietly got rich. Wrong in a way that somebody, somewhere, benefited from us believing. My name is Maxine, and I am Rich Auntie Knows. And today, I am going to sit across from you and dismantle every single one of them, one by one. No jargon, no judgment, just the truth that somebody should have told us a long time ago. Because here is what I know. The women in our communities are not bad with money. We were just handed bad information. And today, that changes. Let's get into it. Lie number 1. You need a lot of money to start investing. I understand why this one stuck so deep. When most of us were growing up, investing felt like something that happened in boardrooms and brokerage firms. Something that required a suit, a briefcase, and a minimum of $10,000 just to get in the door. And honestly, that feeling was not entirely in our heads. The financial world was not exactly designed with us in mind. Our communities were not handed the same starting line, and nobody sat us down and said, "Here is how this works, and here is how you get in." But here is what I need you to hear. That was then, and this is now. You know how the cookout works. Nobody shows up with a full spread. Somebody brings the potato salad. Somebody brings the paper plates. Somebody brings the 2 liters. Somebody shows up with just the hot sauce and a lawn chair. And somehow that counts too. And yet, when everybody puts what they have on the table, the whole thing comes together. Nobody needed to arrive with everything. They just needed to show up with something. Investing works exactly the same way. You do not need to arrive with $10,000. You bring what you have consistently, and over time, the table fills up. Because in 2025, you can start investing with $5. $5. Most major brokerages, Fidelity, Schwab, Vanguard, have 0 account minimums. 0. You open an account for free, deposit whatever you have, and buy a fractional share of an index fund. $5 buys you a tiny piece of Apple, Microsoft, Amazon, and hundreds of other companies. Today. This week. Now I know $5 does not feel like it matters. But here is what compound interest does to $5 a month over 30 years at the market's historical average of 10% annually. It becomes $11,000. And $50 a month becomes $113,000. From $50 a month. The starting line was never as far away as they made it look. And the most powerful thing we can do right now is start walking. Bring your potato salad. The cookout is already happening. Lie number 2. The stock market is just gambling. I hear this one a lot, and I understand where it comes from. Because for communities that have watched wealth get extracted, promised, and then disappear, trust is not something you hand out freely. The market has felt like a casino where the house always wins and the house was never us. But here is the difference between gambling and investing. When you gamble, The odds are mathematically stacked against you. The house wins by design. When you invest in a broad market index fund, you are not betting on one company. You are betting on the entire economy continuing to grow, and over every 20-year period in the history of the S&P 500, through wars, recessions, crashes, and pandemics, the market has always been positive. Lie number 3. You should wait until you're completely debt-free to start investing. This one sounds so responsible, so logical. Pay everything off first, then invest. And if all debt were the same, that advice would make sense. But all debt is not the same. And treating it like it is has kept too many of us waiting for a finish line that keeps moving. Here is how to think about it. High interest debt, credit cards charging 20% or more, pay that off first, always. Because no investment is going to reliably return 20%, and there is no point growing wealth in one pocket while it bleeds out of another. But low interest debt, a mortgage at 4%, a student loan at 5%, a car note at 6%, that is different. The market has historically returned around 10% annually, which means while you are paying 5% interest on one side, your investments could be growing at 10% on the other. You are actually ahead by staying invested. Lie number 4. Investing is too complicated for the average person. The financial industry has spent decades making investing feel complicated. The jargon, the products, the endless options. Because a confused person is an easy customer. A confused person pays fees, buys products they don't understand, and hands their money to someone else to manage. Confusion is profitable for everyone except you. Here is what I need you to hear. The simplest investing strategy available: buying and holding a low-cost S&P 500 index fund has outperformed the majority of professional fund managers over every 10-year period studied. Not sometimes, consistently. One fund, bought regularly, left alone. That strategy has made more ordinary people wealthy than every complicated trading system, every hot stock tip, and every actively managed fund combined. You do not need to understand derivatives, options, or technical analysis. You do not need a financial advisor charging 1% of your portfolio every year. You need a Roth IRA, a low-cost index fund, and the discipline to keep buying regardless of what the market is doing. The complexity is the lie. The truth is beautifully simple. Lie number 5. You have waited too long. It is too late to start. This is the lie I feel most deeply because I know how it lands. You find out about investing in your 30s or 40s, and the first thing you feel is not excitement. It is grief. You think about all the years you did not know, all the money that did not compound, all the time that is gone. And that grief turns into paralysis. So let me give you some mathematics that I need you to hold on to. If you start investing $300 a month at 40, and you invest until you are 65, 25 years, at the market's historical average of 10% annually, you will have close to $400,000 starting at 40. If you wait until 50 and do the same thing for 15 years, that same $300 a month becomes $124,000. The difference between starting at 40 and starting at 50 is $274,000. $274,000 from the same monthly amount. The only difference is the decision you make today. Lie number 6. You need to pick the right stocks to build wealth. Social media did not invent this lie, but it supercharged it. Everywhere you look, someone is showing you the stock they bought that went up 400%. The crypto that made them a millionaire. The tip their cousin got that changed everything. And it feels like everyone else has the secret code and you just need to crack it. Let me tell you something. You ever watch somebody play spades who does not know how to play spades? They overbid every single hand. They go in thinking they are going to win every book. They are loud about it, confident about it, and then they set the whole team back because they could not deliver what they promised. That is stock picking. And then there is the player who sits down, quiet, looks at their hand, bids exactly what they have, plays every card strategically, and wins round after round after round without making a single speech about it. That is index fund investing. You do not win at spades by being flashy. You win by being consistent, strategic, and honest about what you are actually holding. Investing is exactly the same. Here is the data that settles it. If you invested $500 a month into a simple S&P 500 index fund for 30 years at the historical average of 10%, you would have over $1.1 million. That same $500 a month in an actively managed fund, where professionals are paid to pick the best stocks, returns around 7% after fees. After 30 years, that becomes $610,000. The difference between flashy and strategic is $520,000. $500,000. Lost to the excitement of trying to win every book when you did not have the cards. Know your hand, play it smart, and let the boring strategy win the game. Lie number 7, and this is the one I want you to really hear. Investing is for other people, not people like us. I understand where this one comes from. When the images of wealth and investing have rarely looked like us. When the financial industry has historically made our communities feel unwelcome. When generational wealth was something other families had and we were just trying to make ends meet. It is easy to believe that investing belongs to someone else's story, not ours. But I need you to understand something. That belief, as understandable as it is the most expensive lie on this entire list. Because it is the one that stops everything before it even begins. Black women are among the fastest growing groups of investors in America right now. We are opening accounts. We are buying index funds. We are building wealth that our children will inherit. We are doing it quietly, consistently, and powerfully. And you are part of that. Investing was always for people like us. The door was not always open, but it is open now. And Rich Auntie is standing right here, telling you to walk through it. Not one day, not when things are more stable, not when you feel ready enough. Now. 7 lies, all of them designed, whether intentionally or not, to keep us on the sidelines of a game that was always ours to play. You do not need a lot of money. Bring what you have to the cookout and let it compound. The market is not a casino, it is ownership. You do not have to be debt-free. You have to be strategic. It is not complicated. It is one fund bought consistently and left alone. It is not too late. Today is your starting line. You do not need to pick stocks. Know your hand and play it smart. And investing was never for other people. It was always for you. Here is your action for this week. Pick the one lie from this list that has been sitting heaviest on you, the one that has had you on the sidelines. And do one thing today to prove it wrong. Open the account. Make the first deposit. Set up the automatic transfer. Just one thing. Rich Auntie will be here next week with everything you need to keep going. Share this with a Black woman or any woman in your life who needs to hear it, because this information belongs to all of us. And your future self? She is already grateful for the decision you are about to make. I'll see you next week.